Microsoft, as we've mentioned, announcing that it is permanently closing its retail stores, focusing instead on its online presence and support. This would result in a $450 million charge. Let's bring in our Josh Lipton. Josh, you and I were talking about this morning. This is a huge deal, I think, for a number of reasons. Apple opened up stores, 15 plus years ago. Microsoft opened up its first stores just over 10 years ago, around the time that Windows 7 was coming out, and they wanted people to get their hands on this brand new, newfangled touch operating system. There are a lot of diverse employees who work in retail, and it's unclear what Microsoft does with that employee group too, but a sign of the times, certainly.
Yeah, pretty interesting, John, news. And I think it's also interesting to point out the street is starting to weigh in. It seems like analysts who cover this name like what they hear here, actually, with the decision. Dan Ives over at Wedbush saying it was the right time for Redmond to, quote, rip off the Band-Aid. He thinks the one-time charge you mentioned there will be mostly overlooked by the street. Evercore's Kirk Materne saying given the growing shift to digital, he thinks the decision to exit the physical retail market, in his words, not surprising, and he thinks most investors will welcome the announcement. To your point, John, Microsoft had about 80 stores. That's dwarfed, obviously, by some rivals like Apple. Apple has more than 270 here in the United States, more than 500 around the world. But the concept there, you give people a chance to go in, test drive some hardware, experiment with some of the new products you have. It was interesting. I caught up with tech analyst Patrick Moorhead, too, who knows Microsoft very well. He thought strategically to him, John, the decision actually made a lot of sense to put really the time, the money, the effort, and the focus into your online efforts. He says, after all, Microsoft's been pretty good at connecting people with online. In fact, one stat they gave us, John, today in this news, that the digital storefronts, they said, Microsoft.com and also Xbox and Windows storefronts, they say, that reaches more than 1.2 billion people every month in 190 markets, John.
Yeah, but Josh, there's only so much that you can do online. Microsoft was supposed to be launching this new Xbox Series X this holiday season. We'll see how that goes. They're going to launch Surface Duo with this folding screen. And if you really want to generate excitement about hands-on stuff like that, that was the whole idea behind the retail concept. I don't know. I feel like analysts, if a stock is doing well, then they kind of automatically tend to agree with whatever the company's doing. But I really think they are leaving some wide open white space for Apple here, which is in the midst of this platform transition to its own chips. If the analysts think that it makes so much sense for Microsoft to back out of retail, then why aren't they dinging Apple for staying in? I'll bet you they're not going to do that. They ought to be consistent. I want to see a consistent argument, Josh.
On the other hand, I could see where, surely there'd be some other places some of those Microsoft fans should go and try out some of that hardware. I would imagine, to your point, John, obviously a lot of excitement about that new Xbox console coming later this year. I would think, folks who want to try that out, I'm sure would be able to go to a place like Best Buy to give that a spin. And I do think another question you have to ask here is, do you think, for investors, do you think this signals some broader shift? Do you think that it means Satya Nadella and his crew are kind of pulling back from the consumer in some way? I thought Patrick Moorhead made a good point about that. He doesn't see that from this announcement. In fact, he says they continue to press on, not just with the Xbox, but on the software too, with the new family-oriented Teams product. So it'll be interesting where they take this from here, John.